Okay. Welcome to our weekly Radical Truth podcast. This week, I'm excited because I have one of a really brilliant woman, Peta Milan, who has a family office. I'm not going to get too much into her whole background. She can share that with you. So for those of you that are not familiar with Peta Milan, just give a kind of background that who you are, where you're coming from, what is your big purpose, and also what led you to focusing all of your efforts, which is substantial. I've looked in regenerative investing, and thank you very much for doing this. I'll go on mute now.
Thank you, Robert. Yeah, so I'm Peta Milan, originally Australian, first generation family office. We're the only family office in the world that's specialized in regenerative investing at the moment. And this came about where I had a kind of tripartite moment around 2017. I was asked by the former chairman of the Intergovernmental Panel on Climate Change to join his international advisory board. He was creating a new group called the World Sustainable Development Forum, and it was a reaction against the World Economic Forum and COP because he was a bit tired of lots of talk and no action. So he put a new group together, and he was very well networked. Under his stewardship, the IPCC had won the Nobel Peace Prize alongside Al Gore for the 1.5 degree special report, which is the most prolific, reputable climate science at the moment, and is shaping a lot of government policy. So his network had a lot of former heads of state and high-profile people interested in the climate topic. Around the same time, I was asked by the UN to join a working group called the Future of Capital, and that put me in touch with a lot of really founding thinkers in impact investing, conscious capitalism, philanthropy, a number of really interesting Indigenous leaders. And then the third thing that happened was I was asked to join All Hands, which is a multidisciplinary, multi-stakeholder group that works alongside NATO Five Eyes, that looks to counter radicalization or understand radicalization and how to prevent it from turning to violence. And so we were studying a lot of mass casualty events and terrorist activities. And I was one of very few women and very, very, very few non-security specialists, because we were there with leaders from a lot of the security, national security, like the Met, the Australian Federal Police, NYPD, and so on, the FBI. So I was at this really interesting intersection of capital and finance, climate and security. And so I felt like I was seeing patterns that perhaps folks that were very, very specialized weren't seeing. And what I was seeing, one of the profound things that I was seeing, was that we had a $1.16 trillion impact investing market, about $9 trillion in family office funds, about $1.5 trillion in national economic development spending. And we were seeing zero systemic impact in our climate and our social data. And so I started asking questions, instead of asking questions about capital efficiency, which is what we're taught to ask when we're in finance. I was asking questions about effectiveness. How do we become effective at deploying capital or investing or innovating new assets in a way that actually serves to enliven life rather than degenerate life? And it was my brother who introduced me to regeneration. So we really did a deep dive. We got our whole family trained, and it's a specific methodology, or a way of developing and designing, a way of thinking, a way of relating, and a way of practicing. And because I had been on the international speaking circuit for about a decade, our family commissioned a study where we looked at over 1,000 people and projects that said that they were doing regenerative work. And we also looked at conventional approaches to investing, including mergers and acquisitions, large-scale corporate change or digitization projects. We were looking at private equity, VC. We were looking at mutual funds. We were also looking at conventional approaches to impact investing, ESG funds, carbon projects, and green bonds. And we found that the aggregate global failure rate in terms of returns, but also systemic impacts, and we were measuring an integration of ecology, economy, society, and culture and heritage, We included culture and heritage because there is a direct correlation between cultural extinction and biodiversity loss. And we found that the global failure rate was about 70% when we aggregated it. And that wasn't just on systemic impacts, but that was also on financial returns. And so when we looked around the world and talked with some of the leading regenerative practitioners, and we looked at different asset classes, including things like real estate, infrastructure. We looked at some commodities. There weren't too many examples, direct investments. So we looked at regenerative projects within organizations. And we looked at the financial returns and those same systemic impacts. We found a success rate of 60%. So it was double. But I was also interested in what this 40% failure rate was. So we did look at 1,000 people and projects that say they were regenerative, including in regenerative agriculture. And we found that only about 2% were working with the methodology. Most, particularly in regenerative ag, were confusing regeneration with restoration concepts. So they were focusing on soil restoration or biodiversity restoration, forest restoration. Green, circular, sustainability, and they're very, very, very different paradigms of work. And when we did look at the 2% that were working with the methodology, most were from a land-based background. So permaculture, ecology, biology, architecture, urban planning. And so those folks, whilst they were doing really amazing grassroots work, when the project or the asset got to the level of needing investment and political will, that's where it would fall over. Because as we know, investing and finance is a highly codified language. I mean, unless you've really been trained, you don't really know what all these terms mean. You don't really know what investors are looking for. And so these projects would fall over. So we found a unique role for our family office to serve as a bridge, because we did speak the language of finance, and we had exposure to working alongside and being in discussions with folks at high levels of politics, so that we could actually start to really explore how we can build this capability. Now, the problem, or the challenge for us, I should say, it wasn't really a problem, but the challenge for us is that because we transitioned our thesis to being exclusively regenerative, there just weren't many genuinely regenerative projects on the market to invest in. There was more and more folks including that word on their deck, but when we looked at how they were working and how they were functioning, it was very clear that they were not regenerative in the way of using the methodology. And the reason we got so kind of fixated on the methodology was because those were the cases where we saw these assets delivering higher returns, systemic impacts, but not only that, were really more resilient to macro shocks, including financial crises. They outperformed during the pandemic. We even saw in some cases reversal of climate change conditions. So where other areas were affected by large-scale fires or cyclones, these folks were not. They were protected. So when you're designing in a way that's for the system, for enlivening the system in turn protects these assets. And so it's building a level of resilience that conventional approaches were not. So we were very interested in this because as a family, we care about legacy wealth. So we did get quite, really quite strong on the methodology and the need for that. And so because I'd been doing international speaking for about a decade, I could see very clearly that not many folks in the investment or political space knew about this at all. And so we, in addition to managing our own portfolio as a family office, we got very committed to supporting other families, other investors, folks that were working at high levels of boards, C-suite, multilateral organizations and governance, the folks that really made decisions that could be impactful and that drove capital. It became very important for us to help those folks build capability in understanding what regenerative investing, business and governance was all about. So we designed and then opened up to the market the first professional certification for leaders in these processes. So that's essentially what our family is doing and how we got there. We do have our own portfolio, which we manage. mostly in venture and moving in towards real estate and land-based projects. But we also are offering this capability building and support to other family and investment leaders.
And there's a lot to unpack over there. So would you say then that regenerative finance is non-extractive?
Correct.
Okay,
It's
so
actually
that's the main difference from ESG impact investing, which is just another form of extraction.
correct, yes. Yeah, so
And
within the methodology, there are about 10 living systems principles. So we
mhm.
based on understanding how living systems works. And there are dozens and dozens of systematics frameworks within the methodology. So it's designed where assets serve to enliven all of life, to create conditions for life to thrive. So in virtue of that, it is not extractive. But ironically, or interestingly enough, when we do it that way, the returns are higher and the assets are more resilient. So it's really forcing us to challenge some of the conventional wisdoms that we've been taught throughout economics and business degrees.
So getting back to, you mentioned that your brother kind of turned you on initially or gave you some guidance. Did you have to struggle to get your family behind this? Because there's
No.
always dynamics in a family that I want
Sure.
to go
Yeah,
this way, you want to go that way.
sure.
So,
For us,
so, oh, great.
we were very lucky in our family because I think, within our family, those of us that are involved in the family office, we're very, very values and vision aligned. And so for us, it just made sense, when we were looking at, the qualities, the values, the nature of the work, the types of investments and returns. And we had to take some big risks, to do that because we were starting to do this at a stage where nobody else was really doing it. And so we really had to take on that role of market shaping rather than fast following. And with market shaping, there is a bit more risk because you have to invest a lot of time, energy, will, money into education, to really open up the interest and the minds and the capabilities of others.
Your focus of the work that you're doing now in the education is mainly on family offices, or is it also speaking to institutional fund managers?
Yeah, it's all investment leaders. Yeah. So, I mean, the particular reason that we're interested in families is because we believe that families care about legacy wealth, and families are driven by more of I guess, a fundamental basis of care, where they're more willing to have a longer term view. So some Chinese families actually have 1,000-year investment trajectory, right? That's pretty extreme. But most families have generational trajectories. And so that is a lot longer than conventional investors like from VCs or private equity and many funds who are looking for 5 to 7 year exits. So, but having said that, of course, we're interested in working with leaders within institutions as well. But I guess the low hanging fruit for us was working with families because there's already that basis of care and a bit more kind of like long-term thinking.
But usually, the more assets a family has, the more isolated they are. It goes almost a direct correlation of hundreds of millions, billions, tens of billions, hundred billions. Bezos doesn't have a sign on his house, "Hi, I have billions, come visit me." So how do you get that access? Because you're selling a completely different approach from what they've been doing until now, and what their wealth advisors have been telling you. This is how you should manage your money. So how do you make that entry point, and how do you get that buy-in?
We talk a lot about risk. There are a lot of families who don't really care about impact still, and they're still running an opportunistic thesis, and they're looking for multiples. And that's fine. Like, I care about impact, but I don't really care. Like, I'm not judgmental about whether somebody cares about impact or not. the reality of the situation is that we're in the highest level of market volatility that has existed since the 1960s. The only folks who are loving it really are the traders, to be fair. You know, and so there are a lot of questions for investors about risk. And we're seeing a lot more macro risk than what economists would normally bring into play in the past. So I've shared stage with a lot of really high profile, wonderful, intelligent economists, but they still talk about interest rates and inflation as two of our major risk factors, right? And they're completely ignoring the risk of climate change. And when you look at the World Economic Forum's latest risk report, climate change is and geopolitical risk are the top two risk factors coming into the next couple of decades. And so they actually did a survey, the World Economic Forum, with leading economists, and almost all of the economists said that they're expecting greater volatility into the future, and very, very few said that it was going to improve at all. Most said that it was going to worsen. So ultimately, we need to look at this from a multitude of perspectives, not just an impact perspective of how do we make things better, because there are a lot of folks who just want to focus on their net worth. But even those folks are facing risk in a way that the private banks, or the Goldman Sachs and the JP Morgans and the conventional advisory firms, they just don't know how to deal with that level of risk. It's unprecedented. So that means there is an opportunity to look at alternatives.
You focus with regenerative investing more in illiquid assets, more in private equity, real estate, as far as agriculture, but not so much in listed companies or fixed income.
The only reason we don't invest in listed companies is because there aren't any that are regenerative. Right? It doesn't mean that a certain asset class is uninvestable. It just means that in order to be investable for us as a family, it has to be working powerfully with the methodology, And so at the moment, we don't invest in funds either, because there are no regenerative funds. But, we're in discussions with a number of groups who are interested in creating regenerative funds. And if that's authentic, if that's genuine, it's not just going to be another word that they slap on their pro forma to make it interesting to folks. But if they're genuinely doing the work, then yeah, we would be open to investing in those. But that's why we need capability, because there's just not a lot of range at the moment, because it's so new, and that's okay for us. But it's also interesting to get then other families and other investment leaders on board to look at how to transition existing assets, or how to design and develop new funds and new assets that are working powerfully with the methodology.
You're very driven, and from the moment that we met, you're very driven. You're very purpose focused. Most are not at your level of awareness or commitment. You most have to go through this process of understanding. So, Article 9 funds, the SDFR and Article 8 are not regenerative investment. Does it frustrate you that there are so many fund managers that call their fund regenerative, regenerate, VC? Leonardo DiCaprio has a fund called Regenerate.vc. So does it bother you that people are using that to give a false impression?
I think it would be a waste of my energy to get upset by these things, because that's what human beings do. We've done it, for all of time. We hear a beautiful prophet, like in Buddha or Christ or something, and then we try to turn it into a doctrine, and we try to institutionalize it, and then it gets thwarted from their original teachings. And we did the same thing with sustainability as well. Everyone was putting, sustainability in its original form was about how do life systems sustain themselves over time? But what sustainability became was, how do we sustain business as status quo without making things worse? you know? So humans do that. So it's really would be a waste of my energy to get, you know, upset about or frustrated by the lack of integrity around the word. But I am a very unashamed restraining force or energy around it. So when people say, oh, regenerative this, regenerative that, I'll be like, so tell me some more about that. What are you doing? How are you approaching it? And then I will challenge them. I'll say, well, what I'm hearing is a great sustainability concept there, or a great, you know, restorative project, but I'm not hearing anything regenerative in there. And so all of those folks who say they're doing regenerative work, but they're not, I mean, it's an opportunity for building more awareness from my perspective.
You offer training certification to become, I guess, a regenerative investor, I guess, or
Right.
not, or is it also about fund management?
Yeah, it's anyone that's in leadership. So even within the program, we look at portfolio design from a regenerative perspective. We look at regenerative governance. So it's even for people who are governing places. You know, when we're looking at the 1.5 trillion that's spent every year by the major nations in economic development spending, you know, we've got 600,000 unhoused people in the US right now, and a 12% budgetary increase at a national level year on year for the past couple of years in affordable housing. And the problem hasn't gotten any better, you know? So at some point, and I know that it's harder for politicians because they get 2 years in and then they're chasing the next political cycle for the next election. So the eye is often on re-election more than it is on how we do things. But the way in which we have created our structures don't support regenerative work. So for instance, a government has like a president or a prime minister, and then it has a vice, and then it's broken up into different departments or, you know, agencies, whatever, and they're all siloed and they don't share budgets and they all have their own agenda. And it's the same for the multilateral organizations. So it's very, very hard to do horizontally integrated work or systemic work when you're fragmented like that. You know, if we look at an example, if one way that we can view a country is in its ecological patterns, right? Because ecological patterns over time have also shared cultural norms. They've also shared, you know, certain behaviors and social structures, because we're heavily influenced by what we're surrounded by. The way I behave when I'm living in a mountain environment is going to be very different to the way I behave when I'm living on the coast. So if we look at the Rocky Mountain Range, for instance, in the US, it passes, I think, over 5 states. So if you were actually to do a regenerative approach and you look at the Rocky Mountain Range as a bioregion, then it would mean that the way in which you're collaborating on that project would have to involve 5 states working together. That's never happened before, not in that way. So it really is shifting how we think about things. You know, the Vietnamese government has just made a wonderful announcement of a commitment to, you know, moving towards a more sustainability agenda. But it's really the 68 or 69 provinces, you know, and the province leaders that sit under the national government that have more influence, because they're the ones who are closer to the ground and closer to the people. So how do you get groups of very culturally diverse, very different agendas, politically or otherwise, to work powerfully together to bring about a systemic shift? That's very hard. And we spend so much energy and effort trying to change things. That's why the failure rate for change programs is about 70%. We confuse in our language systems and structures. I've seen a lot of folks doing like systems this, systems that. And when I look at what they're doing, they're looking at energy transition, they're looking at mobility transition, they're looking at these types of things. They're structures. They have a form. The system is the relational dynamics that gave rise to those structures. So if, for instance, I'm taught that what business is all about is competition for scarce resources, and I want to extract as much as I can for as low cost as I can, which we call efficiency, and I want to grow it as big as I can, as quickly as I can, and that's what I call scale. And I'm going to take all that value, which I only define in terms of money, and extract it to some shareholders that live in Zurich. That's what we call the role of business or the purpose of business. Then what I design and develop is going to reflect that truth. If I see myself as a complex living system, because our bodies are complex living systems, we're learning about that all the time, and I'm nested in a larger complex living system called a family or a community or a business or a family office, whatever that is, and that family office is nested in even larger complex living systems, like we can go all the way out to life systems, however it looks, then the way in which I think about things is going to be really, really different, because I can see that I have a deep interdependency, like my existence, my well-being has a deep interdependency on other life systems, on other complex systems. So what we need to develop is what we call higher order thinking, which is the capacity to hold greater levels of complexity and to co-evolve those systems together. At the moment, what we're doing and what we've been taught is we confuse complicated with complexity. We're taught that things that are complicated are high risk, and we don't want to go there. We want to go with simple things. But the thing is, life is complex, right? It has complexity. And we're trying to create simple, isolated solutions for complex, dynamic, living systems. It's like trying to put a round hole into a square, a round peg into a square hole. It doesn't fit. And that's why when we think of carbon, okay, I'm going to solve for carbon because we have too much carbon load. We follow the scientific model perspective and we isolate carbon to study carbon. And when we isolate it from its environment, it changes, of course, because all of those other elements that it was connected to are affecting the carbon. So we don't see it in its living systems context. And then we try to solve for it. And most of the time, we create negative externalities that we didn't expect. But the good news is, from an accounting perspective, we're not responsible for negative externalities. We don't have to report on them. But the truth of the matter is, irrespective of what our accounting standards say, the negative externalities affect quality of life. And so whether we want to face it or not, we are deeply interconnected into these life systems. So we need to have a way in which assets serve to enliven our life systems. And the beautiful thing about it is when we've seen assets do this, the system actually protects those assets back. You know, we have seen reversal of climate change conditions where assets are left standing after others were destroyed. We have seen assets overperforming financially when their competitors were struggling because of a financial crisis or a pandemic. And it doesn't have to take a long time. We can do this in 2 to 5 years. So ultimately, that's a big reason, why we've focused on this and why we're focusing on bringing this capability and this new awareness to other investors.
The last wealth reports that I looked at, according to them, the wealth writers, there's 5 times more wealth than there is global GDP. So there's $5 chasing $1 of business. And you said at the moment, there's nothing on the listed market that could be called regenerative. So even if, do the investors have to be more proactive in actually creating enterprises that meet regenerative, because there are just not enough regenerative enterprises that are meeting your definition?
Well, they will. I mean, look, the flow of business, and particularly with large corporates, when corporates get corporatized, I mean, we've all learned about the business life cycle, right? And so business, has this startup phase at some point, every business did with its founders, and then it goes through this really exciting time of innovation, and then it has, if they're lucky, with some capital injection, some rapid growth, and then they hit the stabilizing point where they're like creating best practices and policies and procedures, and they corporatize it, and that creates entropy. And then what happens is that you start to see a decline in profits or a decline in business. So then what the business does is it cuts staff, it cuts benefits, it cuts all the costs so that it can try to maintain a sense of profitability to keep shareholders happy, and then figure out a way to do something new or do something different to ride that next curve up. So business is constantly booming and busting, whether we see it actually busting or not. You know, the pattern is booming and busting all the time. So that is not a regenerative model, and it's not viable. It's not sustainable over time. So the other point, the point two on that comment, other than moving business out of boom bust cycles, is that big multinationals, big corporates that are having all these record profits and whatnot, they are still fundamentally reliant on our life systems. They're still reliant on the extraction of minerals for the creation of technology. They're still reliant upon the existence of oxygen and fresh water. They're still reliant upon all of these life systems. Now, the cost, the actual cost of large-scale catastrophic weather events as a result of climate change is increasing so much. You know, how are we going to value the cost of the wildfires in Los Angeles at the moment? You know, how are we going to value the cost of the flash floods that happened in Valencia just a couple months ago? You know, more and more of these things are starting to impact the global north now. And so it's starting to affect affluent people. And when affluent people start to feel pain, they'll start to see the relevance. In the past, it's been mostly the global south that's been affected by these types of things. So now it's starting to become more in the face of people. So large corporates will have to deal with this, because, you know, another impact is a lot of insurance companies out of the US have come out and said they're no longer insuring acts of God anymore because the reinsurance costs are too high. So if the insurance model is breaking down, how does that affect our businesses and our assets if we can't insure them? You know, so there's a lot of things coming to the fore now which are affecting large corporates.
Could you try to describe, for those that are still kind of in a kind of low level of awareness and trying to wrap their heads around regenerative investing, what would a regenerative investment portfolio look like? Some kind of simple examples so people can see, oh, she's talking about that. Okay, I understand that. So whether it's in some of the things that you've been investing or proposing to invest, or things that you've seen that fit your definition of regenerative investing.
Yeah. So a regenerative asset, by our standards, is not an industry specific thing at all. It can apply to almost all industries, right? I mean, we have a certain level of I don't know, we have our own personal family values where, you know, we wouldn't invest in tobacco, or we wouldn't invest in defense, but that's just like our commitment as a family. But those things aside, in principle, it's not an individual industry or sector. So we need to like let go of that way of viewing things first. So let's just create a blank slate there. Now, if any type of asset, whether it's land-based or whether it's a venture or a business or a company or whatever, if we look from a single asset, because all a portfolio is a collective of single assets, right? So if we have a look at a single asset perspective first, if the regenerative methodology is used to develop the core strategy of the organization, and the way in which the products and services are being designed is coming from the storing in place process, and they have a way of measuring the impact measurement that is systemic and verifiable, not this checkbox thing like ESG, then we would say, and you have a certain number of leaders that are trained in the methodology too, I have to say, within the organization, then you have a regenerative organization. Now, when you're designing your portfolio, you can have a number of different assets in your portfolio, even across different asset classes. But if you're coming from understanding your own self, so say the family, one reason why our family got very effective at this is, you know, my family and I, we were doing our own work to look at what is our own unique potential as individuals. What are we bringing to the table? And not just things that we can do, but who we are, what's unique about us. And then how does that come together and create something profoundly unique, which was what our family office was doing. And then how does that then express itself in the types of assets we choose to invest in? And so within a portfolio of assets, that can itself serve as a system. So the assets, instead of looking at them as separate assets and you're diversifying your risk by spreading your risk across a number of different assets, each asset should contribute to the other asset in a way that enhances its value. It's interconnected. Like if you think of the mycelia of a rainforest, you have these nodes, these different parts of the mycelia, but they're interconnected with the threads. I don't know what the right scientific term for that is, but it basically brings life to the whole forest, right? Not just the trees, but all of the life. And so the portfolio serves like that. So when we're looking at selecting assets to invest in, we're looking from the perspective of, okay, we already have this in our portfolio. Now, how is this, if it's to fulfill its potential and serve the system that we're seeking to serve, how does that also then contribute to our existing assets in our portfolio? And how do our existing assets in our portfolio contribute back to that? So we're building portfolio resilience. Instead of seeing single assets as fragments or separate, and we're just spreading risk across, and we're expecting maybe 40% to fail and 60% to succeed, which is very high, by the way. I think it's the other way around, like 60% fail and 40% succeed. Then, we're designing and building in a way that we're kind of creating almost like a life system model out of our portfolio. Does that make sense?
Yeah, for me it does. Hopefully for those who are listening also. Do you find that you have to accept below whatever market rates are, below market rate returns following a regenerative investment strategy?
No. What we have to accept is a developmental process. We have to be committed to building capabilities in those founders that we're investing in. So we offer scholarships through our venture studio to do the certification. And we have to accept a genuine period of capability development. But that's not new, right? Because VCs say that they do that. I mean, I don't know how much they actually do it, but they're supposed to be there to support founders and provide them with support to grow their businesses. We're just doing it in a regenerative way. And where, we've got, this amazing model that was developed by Regenerative called the 18-cell framework, which is the most comprehensive strategy framework that I've ever seen for any type of business or investment. And we work with that and we train people in that. So basically we're tooling people up genuinely so that we can be very, very clear how that asset is not only contributing to the life of our portfolio and the value of our portfolio in a genuine way, but to all the other individual assets as well, and to the system that this asset is seeking to serve. Because when Maslow created his hierarchy of needs, right, if you look back at Abraham Maslow, all the hierarchy of needs within a human being were geared towards self-actualization. We're not working for that. We see that self-actualization is actually in service of systems actualization. Right? So if we're not working for the actualization of the system, we're remaining fragments of these life systems. We're not really fully expressing and contributing in a way that's healthy to the whole system. And that is why we have now surpassed 6 of our 9 planetary boundaries, because we're contributing.
Do you find that there's a difference geographically or generationally with respect to, is it the first generation family or the second, third, fourth, fifth, sixth, in their willingness to pursue regenerative investing? Are the Asians more open to the idea than Europeans or Africans or Latin Americans or North Americans or Australians? Do you find any difference, or basically they're all pretty much the same?
Well, I can say that we're getting a lot more interest in the global south because the global south are suffering more.
Yeah, yeah, yeah.
Whereas, if I'm, living in my Manhattan penthouse, and I have all of my needs, wants, and desires fulfilled whenever I want it, what's the incentive for me to do anything differently?
Mm.
Right. But like I said, that is the pain is moving to the north now. If we look at, what's happening in California at the moment. So I would say genuinely people only shift out of their comfort zone when there's some other thing that's more painful.
Yeah, absolutely true. Absolutely
Yeah.
true.
So there's more pain in the global south. So we're seeing that there. But I would say that what's interesting is we have this really big, between, I've seen some people say 85 trillion. I've seen some people say 105 trillion of next gen wealth transfer right around the world. And there is some pain there. And the pain that's there is that these next gen are very committed to the loyalty and the legacy of their family, but they're
Yeah.
also trying to find a valid place for their identity and their uniqueness in taking on the family, into the future generations. And so that itself is interesting in terms of how do you reconcile that, you know? Because in a recent study out of the US family offices, I think over 1,000 family offices were studied, and it was quite a high number. And I can't quite remember the exact number, but it was somewhere between 65 and 75% of current wealth holders did not have faith in the values of the next gen to be successful in leading the family offices forward. Right? So there is a fracturing there between the old guard and the next gen. And how do we reconcile and bring into being a whole new potential for that family? The legacy and the loyalty, which the young generation also feel, but this new set of values, this new role, this new purpose and vision that the younger generation might have.
Are you concerned that we're running out of bandwidth? The money flows going into regenerative investing, the effort needed to do to raise the awareness and understanding and get that money flowing in structures where they can invest is just so overwhelming that, wow.
Well, I mean, human beings also like immediate gratification. We like fast outcomes. And one of the benefits of regenerative investing is it delivers outcomes a lot faster than conventional
Yeah.
approach, and more consistently. So, I mean, if people are willing to unlearn some stuff and learn some new stuff, if they can access that curiosity that they had, when they were younger and start to be willing to explore new things, and then once they have an experience, it's fast and it's profound. And, the results speak for themselves. And so I'm not tired around, bringing this out into the world and talking about it. It's for me, it's an open invitation. Some people won't want to. Some people want to stick to what they know and deal with whatever consequences come of that. Other people are like, yeah, well, our family has been in the logging industry since the 1700s, and we're finding that the ways in which we've been doing timber just don't work anymore because we're faced with all of these challenges that our forefathers didn't have, like, soil extinction and pests and monoculture and illegal logging and poverty in our surrounding farms. And it's complex and we don't know how to handle it. So let's take a look. It's really just an open invitation. And some people will go, yeah, I get it. Like, I can see that impact investing is not having those outcomes. I can see, I want to have a planet for future generations, or yes, I can see the risk and the volatility and it's starting to impact us. And I don't know how to overcome those risks. Whatever the driver is, you know, there's an open space for people to step into to learn about this as an alternative.
And I mean, I imagine the size of the market of regenerative finances investing is quite small in the
Yes,
total allocation. So, and
absolutely.
that doesn't, and so you see that as a challenge, not as a problem.
I see it as an opportunity.
Yeah.
I mean, people are investing in real estate anyway, so why not just do it regeneratively?
Hmm.
People are investing in infrastructure anyway, so why not just bring in a regenerative methodology and do it that way and test it out? You know, we're not creating a new sector here. We're
Hmm.
creating a way of developing assets. So it's not about the market being small, it's just about people being willing to work differently in ways that they're working already. Do you know what I mean? Like, you can bring a regenerative methodology into almost any type of asset design or portfolio design. You can transition any type of asset that already exists so that it's functioning regeneratively. There's a process you have to go through. There's some things you have to do. There's some commitments you have to make in order to do it. But it's for me, it's just like a huge opportunity for folks to go, oh, well, I want to learn how to be more effective.
And there's for institutional investors, I go for family office. For institutional investors, there's lots of central bank regulatory control of what they can do in that. Is that also a reason why you prefer to focus more on family offices rather than pension funds?
No, I mean, the regulatory, I mean, that's just part of the ecosystem. So we would build all those factors in. It wouldn't mean that all of a sudden, you know, pension funds aren't able to meet their fiduciary responsibilities or that there's some other type of regulation that they can't meet. I mean, already if we look to Europe, Europe is really being hammered in terms of like regulation relating to sustainability and net zero, right? That's becoming a huge cost burden and a huge strain for organizations. If they were to engage in the regenerative way of working, you would overachieve on those targets cheaper and faster. So it doesn't matter. We're not asking people to step outside of like, and this is why it's great because it's a methodology. It's not an asset class. We're not asking people to step outside of their regulatory responsibilities and put things at risk that shouldn't be put at risk. The way of delivering this and the way of working will actually accelerate their ability to meet their targets. And some of their targets will change too. They'll start to value things that maybe they don't value right now. But it doesn't put into any type of compromise the fund's ability to adhere to their regulatory requirements.
You mentioned before about all of the homeless and social housing just not affordable, but there is one city in Europe, Vienna, which has no problems with affordable social housing, fully available. The city spends the money to build it, maintain it, and it's also voted one of the most livable cities in Europe, cheap public transport and things like that. Have you ever looked at why they can get it together as others can't?
I haven't looked into the Vienna case study specifically, but what I can say is that the unhoused crisis is not about affordable housing. It's a much more complex issue than that, because where you have increasing affordable housing and people putting money and governments putting money into that, but it's not solving the housing crisis. And not only is it not solving it, it's not improving it. This is part of our problem solution way of thinking. We think that, oh, as a housing crisis, okay, we need more houses. It's not to do with that. It's a much deeper systemic challenge that's to do with a lot of different things, including mental health, including food security, including wages, including culture, including a whole range of different things. And so you need a systemic way of working in order to really elevate these intractable challenges.
You seem to feel that the Gen Z or the next gen that will be inheriting all of this wealth are going to make the right decisions towards regenerative investing, or hopefully they will.
I don't think that that's necessary a fait accompli, I'm sure. I'm definitely not saying that.
Most of the next gen high net worth that I've met were just really interested in selfies and partying. And I've gone to many, many events, and it was very frustrating because they all came up there, I'm really keen on this. But when it came to it, I didn't see much.
Yeah. I mean, like I said, the next gen are facing their own type of crisis themselves. You know, they're facing the pressure to be, you know, the generation that doesn't mess it all up, not only for their family wealth, but also from a planetary perspective. You know, but I've also seen other next gen who are forming, like, who are in negotiations with local governments, who are taking on like a civic role that the younger people never used to take. So rather than judging a person's behavior, I would like to explore like what's really important to them underneath all the, you know, the parties and the yachts and the masking and the social stuff. Like, really, what is it that lights them up? And maybe they don't know yet, and that's okay. But if you provide a space for people to lean into that and figure out what it is for them, you know, one of the really interesting things that I learned that is kind of like a metaphor, I guess, or an analogy to this, is when we were looking at the de-radicalization programs through All Hands, the really good ones that worked mostly in the Nordics, where they're good. The findings were that it didn't really matter what your ideology was, whether you were jihadi or far right-wing extremist or whatever it was. If a human being had a sense of meaning, purpose, and belonging, they would drop the ideology. Right? That's what we need as human beings. We need meaning, purpose, and belonging. And that's more important to us than wealth. When wealth is the highest priority, when money is the highest priority over everything, is because that money is giving us a sense of meaning, purpose, and belonging. Right? It's having us be part of a group that we feel pressure to be a part of, or that we want to be a part of. Right? So people can be completely self-interested, but I have to say that the most unhappy people that I've ever met are the ones that are most self-interested, right? And don't have a sense of a purpose or a meaning that's bigger than their own identity. So really, you know, what you were talking before about, you know, I've heard some people talking about, you know, their work and working mostly with communities and working mostly with people. But when we work with investment leaders, we are still working with people. You know, that's why when you're working regeneratively, there will invariably be some self-growth because you can't just like externalize and say, okay, I'm going to put some stuff out there, but I'm going to like protect all this and not grow and not change and not evolve my thinking. But that's also what makes it an incredibly exciting journey, because we start learning things that are so fascinating that I didn't even know existed before about how life works. And then that influences, the more knowledge that I have, the more understanding that I have around how complexity works and how dynamism works, you know, the more our investments grow and change and evolve and become more impactful and more resilient.
Do people that embrace regenerative investing, are they also not extractive as an individual, as a mindset themselves? Is that usually what happens? It's not only not extractive in their investments, but also not extractive as
well, I think it's a journey, right? We've been raised and encultured in an extractivist way of thinking. And it's a journey, but they definitely move towards becoming less extractive. But it's not then that the self is not important. It's just that it's not the sole driver of everything. So if we look, for instance, I'll give you a practical example, because a lot of what we've been talking about probably sounds a little bit esoteric to some people, but so there was a $10 billion wastewater treatment plant in British Columbia, Vancouver, that one of the leading regenerative practitioners, Bill Reed, worked on. And within that environment, they had a multi-generational conflict with the Musqueam people, who were the indigenous folks. And the government had spent millions and millions and millions to try and resolve this conflict unsuccessfully. And they wanted to build this wastewater treatment plant, and they chose to do it regeneratively. So they ended up bringing in the indigenous people, the local community. They brought in local business, government, the engineers, architects, master planners, like all the technical people associated with the build. And they ended up doing the storing place process for the area and using the methodology. They ended up having 150 design person team. That's like crazy big, right, for a wastewater treatment plant. But it was so integrated and so powerful that they ended up inventing new technologies that were going to use the wastewater to restore the degraded ecology. They ended up creating multiple streams of revenue, which safeguarded the process, and it exceeded the valuations that the Big Four had done on it. And one of the best outcomes was they were able to resolve this conflict with the indigenous groups within 18 months flat. The indigenous groups came out with a 6-point working treaty to work alongside the government in collaboration. And the government saved millions in legal fees, right? So, and it came in under time and under budget. And what we found for these types of things is when they're designed regeneratively too, like the operating costs can be up to 80% less than budgeted, right? It becomes so effective. So ultimately, this is a very, very practical way of working when you're designing and developing assets or transitioning existing assets. But the only thing that you really is primarily important is to have the will to do it, the will to be open to something new, the will to commit to a process. And that's one thing with our family is we have a lot of will.
I'm not sure if you're familiar with Albert Appleton, who was the New York City Environmental Protection Agency commissioner. And when I think Giuliani was mayor, the quality of the water of New York went down a lot.
Yeah.
And the EPA said, you got to put in filters, because New York didn't have filters. The watershed cleaned it naturally. So he said, how much is it got to cost? So, several billion. So he said, we don't have the money. You got to figure out another way. So he worked with the farmers in upstate New York to get all of the farmers involved to restore the watershed, and that saved $1 billion and gave away low-flush toilets. And it was seen as a very successful, proving the value of nature, the New York City watershed.
Yeah.
Going forward, what can those who are listening to this do to help you, and how can they reach you?
Well, I mean, we're not really looking for help, but yeah, if people are interested in learning, I mean, yeah, they can reach me at my family office. I'm happy to share with you my email, and people can email me, and I'm very, very open. I don't have like layers and layers of personal assistance.
I noticed that. You're very accessible.
Yeah, exactly. And I prefer it to be that way. I've had it in the past where I've had like personal assistants and executive assistants gatekeeping me, and I just don't work that way anymore. It's just not conducive with how I like to work. So I'm very accessible. So, if anybody has any questions, or they want to learn more, or they just want to have a chat, then, I'm very accessible, and they can reach me, through you. They can just reach out to you, Robert, and you can just do an introduction, and no problem.
This has been a joy. I'm also very inspired by, I thought I was rolling a heavy stone up the hill while people were putting oil slicks on the hill and pulling me down. And they say, what you're doing? Oh, okay, wow. No. So that's peanuts. This is nothing compared to regenerative finance. So I really admire and appreciate the work that you're doing, and I look forward to seeing lots and lots of fund managers that focus specifically on true regenerative finance, because that would be really great, or more and more regenerative companies that, investors can invest in to mobilize capital. But I agree with you that the pain of climate is starting now to kick and hit
Yeah, and
every.
the pain of social too. I mean, if we look at three of the 10 biggest risk factors that the World Economic Forum identified this year is like geopolitical risk, deepening polarization, and threats to democracy. They're all social risks. They're all coming about through this like increasing inequality and competition for resources. And so, the shift from US power to China power, if that is to happen, comes about from the shift of control of oil and gas to critical and rare earth minerals, which is, China has the largest market share of. And so the EU right now is doubling down, trying to buy up assets. And, the US is not taking that approach. That's why Biden introduced the chip legislation, so they can control the end part of the supply chain. But it's really a largely a political power struggle and race for control over energy and resources, which I think it largely always has been. And I don't want to oversimplify some of like the Middle Eastern conflicts or anything like that. I don't want to risk being oversimplified, but resource control is a really big driver of geopolitical conflict. And so, it's not just climate. These things are deeply interconnected. Yeah. And so we need to start taking a more systemic view if we are to really be impactful in our initiatives.
Do you see any of that possibly happening with the new administration in Washington?
I mean, who knows? Like, I don't have, I have my own political views, but that doesn't bear into our work or our investment. I don't care kind of what side of politics you're on, so long as you're not committing human rights abuses. Of course, I would draw a line at that. But I care about if you're interested in doing the work that's going to deliver the impacts. So we'll see. We'll see what happens under the new administration. There's a lot of pain in the US right now. So we'll see what the government is willing or unwilling to do about that.
Peta, thank you so much for doing this. I really appreciate it.
My pleasure.
The replay will be ready in a little while, and I'll send you a copy of that. You can check that, and then we'll process it and put it out in the coming weeks.
Okay. Well, this is still being recorded, so.
Yeah. Well, we can cut that.
I'll cut it. Okay, cool. Well, thank you, Robert. Let me know. Cheers.
Bye-bye.